Hey, what's going on? So I just want to show the Fibonacci strategy. I'm not sure if it'll work on what you trade. This is on investing.com and this is for crude oil, but you can try it out and see if it works on what you trade. Now, what I've been seeing consistently is this is a win that I had today. Okay, it was fun and I want to explain it. So the way it works is this is the bullish Fibonacci. If this high right here, you see how this wick high right here took the negative 75 or went right to it. Okay, if it breaches and makes another wick high, which it did here, you can actually go long all the way to negative 106. Okay, and this lined up with my strategy of 19 point run above my stop loss, which I'll explain down here. I missed this move here as well because the way it works is if it goes above negative 106, like it did here, and it makes another high, you see how I made a wick high? If it comes back up and breaches it even by a little bit, you can hold it all the way to negative 1.38. Okay, so you could try this out. I mean, it's been ironclad, solid. Okay, and so let me show where I put the fib at. I just wanted to break that down and for you to back test it and see what you think. Okay, so look at this. So when price came above here, okay, it made this high. When it came back above it, that let me know I can hold along to negative 106. You see that? So think about it. What it meant was that as price was dropping here, I was buying. I bought 3 positions as price was dropping because the way I've been trained by ICT is that we buy as price is dropping. We don't buy as prices. We don't chase price. Okay? Because if you do it this way, you have to understand, you have to know where price is going. You can't be guessing, and you have to have back tested data in front of you, to give you the confidence. Okay? So as price was dropping, I was buying. And then when price reversed, which back testing told me it went all the way up, and it just was a huge push, and I got out right here. So I should have got out right at 106, but it was such a big push up, I didn't have time to close the order. I did a manual order. It wasn't like a set TP, it was a manual TP. But I should have kept looking. I was just so happy that it worked out. But I should have known that if this high was breached up here, then I could have just did a quick scalp up here to negative 3.8. Now, you don't have to understand the structure. I understand the structure. I'm just showing you how to pattern trade or how to use the Fibonacci if you don't understand the structure yet, or if you just want to try to get some kind of money right now until you understand the structure. I took time to understand it, whether you believe that or not. I'm just showing you how to pattern trade or, trade with the based on the candlestick analysis itself. Okay, I actually have a bearish breaker right here that I looked at on the 1 hour time frame. Okay, so I understand the structure. I'm just showing people who don't want to put all the work in to understand it, how you still can take a look at it. Now, Jessica Lane, all she uses Fibonacci and trend lines, and she's a millionaire. I mean, I don't think she really understands the candlestick analysis and the structure the way ICT teach it, but you don't have to. I'm not right and you're not wrong. It's we all do this stuff differently. Okay. Like, for instance, this Fibonacci right here, I put it on this swing high. I put the Fibonacci on this swing high and this swing low because this breakout candle right here was my trigger. This is my trigger candle based on the way I look at the structure at a certain time every single day. Okay? But actual candlestick, actual market structure, I should have put the fib on here. Okay, on this wick low and this wick high if this was my breakout candle, but I put it on here to here because I wanted the low-hanging fruit. Okay, so just want to break that down. That was a lot of fun this morning doing that form of trading. I did a lot of back testing over the last 3-5 years. I went in the past, I sat down and took the time to figure out what happens over and over again if something sets up right after 10 a.m. Or whatever time I trade every day. And so I shot another video to explain what all these numbers meant. Okay, This is my stop loss here. This is my trigger candle here. This is the first candle. I wait until I see a certain candle formation pattern with this strategy. I know how to trade structure. I've studied all the ICT's videos like my life depending on like a maniac. I'm just showing you how to do it based on patterns, but you have to go back in time and see what happened. Like right here, this is an 8-point stop loss. But the data told me that after 50, 60 days in a row, 50, 60 days in the past, when a certain thing set up after a certain time every single day, that if I did get stopped out, price, if I got stopped out and it came up here, and then it came back up, let's say it took out 8 points and then it came back up, then I can get back in on a stop, what I call a stop loss re-entry, and run it up 10 points or 19 points on average. Meaning that these were the lowest. Sometimes it would run all the way up to 50, sometimes it would run all the way up to 60, but the lowest I got was 10 and 19. So this is really like low-hanging fruit, and there really was no fear to trade this because I have 3 to 5 years of back-tested data. Thanks.